Hi everyone. Last 1.5 years has been pretty brutal for the Indian investors and indeed very frustrating. Though the headline indices look all decent, but there has been a bloodbath in the broader market. Reasons? We believe there are three primary reasons for it to have happened. First is the slowdown that we witnessed in the Indian corporates earning in the early part of calendar 2025. Second was the elongated deadlock between India and US trade agreement. And third is the ongoing geopolitical situation which primarily infuse risk of sentiment globally. Today only we heard Israel has done preemptive attack on Iran, and we will see its impact on various asset classes in the coming weeks. Having said that, we believe two out of these three reasons are more or less behind us. On trade agreement, we have signed multiple trade agreements with various countries likes of New Zealand, UK, Europe, and the much anticipated US. We believe that this trade agreement will provide much more positivity and some visibility for good, if not perfect. The most important change, which is the way the earning has actually recovered in the last couple of quarters. The Q1 FY26 and Q2 FY26 reported steady numbers, but we witnessed a drastic reversal in Q3 FY26 earning. Whereas the Nifty 50 PAT growth stood at around 7.5% in Q3 FY26, we saw that the BSE 500, which is an indicator for the broader market, did a PAT growth of almost 16.5% in the same time frame. What's really exciting is the way the small cap performed. BSE 250 small cap PAT growth stood at almost 30% plus in Q3 FY26. What led to that is obviously how our government came out with reforms in the form of GST as well as tax cuts started showing their impact. On top of it, the very accommodative RBI policy in the form of CRR cut, rate cut, and the liquidity injection is provided the much needed growth. We believe that this trend of better numbers, especially from the broader market, will continue. Coming on to the third thing, we believe this geopolitical situation will continue to remain in doldrum for the coming large part of this calendar year. The impact of it obviously will be felt with volatility across various asset classes, but overall it doesn't change a thing. So in a nutshell, what really matters for this catch-up of underperformance of the broader market in the coming quarters will be the ability for them to maintain this earning trajectory. And we are of view that Indian corporate will see much better earning trajectory in the coming times. If you really look at, because of that thing, the intensity of FI selling has also gone down drastically in the month of February. In December 2025, we witnessed almost 35,000 crore of selling, which aggravated in January with almost 42,000 crore of selling. But post Q3 numbers and better visibility, we saw the selling dip to almost like 900 crore of FI buying in the month of February. And that was despite of 10,000 crore of selling by FI of Indian IT sector alone in FY26. Nifty IT index fell down almost 19.5% in that month. So what is the point we are trying to make here? That in the coming quarters, we believe on account of strong earning growth, the underperformance of the small and mid cap will see a reversal. We are going to see much better time on account of the trajectory of earnings as well as the ongoing support of RBI and government and its impact on the numbers. Thank you.